Hello everyone, my name is Christine Andersson. I'm External Communications Director at Intrum. Earlier this morning, we announced our financial results for the first quarter 2025, and I'm here today with our CEO, Andres Rubio, to walk through some of the key highlights. Andres, hi. Thanks for joining us.
Good morning, Christine.
Let's dive right in. How do you see the first quarter results?
I think that we have delivered some very strong numbers for a very solid start to the year. Overall, our EBIT has more than doubled to more than 1 billion SEK. We've produced positive net income for the first time since 2023, showing that all the measures we're taking are started to flow to the bottom line. In servicing, our margin in the first quarter of 2024 was 9%. This past quarter, it was 21%, a very significant 12 percentage point increase. And it shows also that we're well on track to hit our 2026 target of 25% margin in our servicing business or higher. In investing, we collected at 102% of active forecast, 108% of original forecast, and we invested a little bit under 300 million at a 23% IRR. So overall, Christine, for what is seasonally our slowest quarter of the year, we've produced some very strong numbers.
So margins have clearly improved, which is great to see. But what about Topline?
Yeah, the top line is the one place where I would like to have seen it better than the numbers that we've produced. That's a function of two things. Number one, in our investing business, we just have less assets than we did a year ago. Partly because of divestiture of assets, partly because we're also investing at slightly below our run rate, and mathematically that leads to less income. So year on year, our investing income was down 5 or 6%. In the servicing side, it's stable to slightly down. So in the servicing side, trailing 12 months is down 0.5%. That's a function of growing in the middle and the north of Europe and not growing, declining because of a structural decline in AUM in Southern Europe, which we need to continue to manage. But I would like to see and regain a more robust, positive growth trajectory in our top line, particularly in servicing and also in investing as we ramp up the Cerberus joint venture.
Let's talk a little bit about our strategic agenda and our shift to a capital-light business model. We recently finalized the investment partnership with Cerberus. What do you expect from this partnership?
Listen, I think it's setting up the foundation for success in investing for us, and it's going to drive that business over the medium term. Why? Cerberus is the biggest NPL investor in the world. We are the biggest NPL servicer and one of the biggest NPL investors in the world, and it's a very important strategic fit. We finalized, as you indicated, the agreement during this past quarter, but we have been working with them since 2023 on the back book transaction, and then also since the middle of last year in the front book investment partnership. Thus far, we have invested or committed to invest over 2.5 billion SEK, of which Intrum will invest a little bit under 800 million SEK, and we're doing so at a very high teens, attractive IRR. So overall, it's a good start, but we need to continue to ramp it up in the coming quarters.
Another key initiative and a big part of Intrum's transformation is the rollout of AI technology. What is the latest progress there?
Yes, we continue to make progress there. As I've said previously in public forums, we don't want to just be an industrial or a collections company that leverages technology. We want to get into the mindset of being a technology company that does collections. Critical to that transformation is the rollout of Ophelos, which is our AI-based autonomous debt resolution platform. Today it's in 6 markets: UK, Ireland, Belgium, Netherlands, Spain, and France. We will add Portugal and Italy this month. And by the end of the year, we'll be in 4 additional markets: Greece, Germany, Sweden, and possibly Norway. So by then we will be roughly at about 60% of our economic or commercial footprint. And during the time between now and the end of the year, our goal is to ramp up volume significantly, and by the end of the year, show a real run rate financial impact. I think this is absolutely critical to continuing to produce more for our clients, produce more in terms of top line and collections, and do so at a more efficient rate, producing more profit for our shareholders. Where Ophelos is already rolled out in scale, which is in Belgium and Netherlands principally, we see exactly that effect. 20 to 30% higher collections, 20 to 30% lower cost. In addition, during the quarter, to leverage all the AI tools that we have available to us, we rolled out Olivia, which is our agentic AI bot. to make outbound phone calls. We are utilizing it currently in Solvia, which is our Spanish real estate business, to make outbound phone calls to potential buyers of real estate. We're making over 10,000 phone calls a month, and it's proving to be just as effective, if not more effective, than human phone calls. We expect to continue to scale that up going forward, and we will see increasing impact from that technology as well.
Sounds really good. So finally, before we wrap it up, we entered 2025 with confidence following the US court's confirmation of our prepackaged Chapter 11 plan. Now we are approaching the completion of the recapitalization transaction. So is it? Are we done?
I'm glad to say that I believe that effectively we are complete, although we won't close until the beginning of July. At the end, as you said, the very last day of 2024, we received a positive decision in the US courts. During this past quarter here in Sweden, the Swedish courts ratified that decision, now concluding all the court procedures related to the recapitalization. What is left now is merely regulatory approvals in various markets, and we expect to close the transaction the first week of July. So I'm happy to say that this chapter, thanks to the overwhelming support of our creditors, has been positively concluded, and we can now turn the page.
That's wonderful. We're entering a new chapter. So if I ask you to conclude.
Listen, in conclusion, as I said at the beginning, very strong start to the year in what is a seasonally slow quarter. And it shows that our strategies and all the measures we're taking to improve the company are starting to take effect. And what's great about it is that we are delivering for our clients more than ever. And at the same time, we're also helping people. This past 12 months, we helped 4.6 million people become debt-free and reintegrate into financial society. So that is the kind of impact we can have while delivering for our clients and improving the profit and delivering for our shareholders. So overall, good start to the year, and we expect this to continue throughout the rest of the year.
Great, Andres. Thank you so much for today.
Thank you.